think you should.
Hey, what's going on, guys? This is Fire Trader from firetrading.org, and by popular demand, put out a poll on Twitter about what you guys wanted to make a YouTube video on. So here it is. We're going to be going over swing trading. So I want to go over some of my favorite swing trade strategies and some of the stuff I like to look for. So three things: technicals, catalyst, and fundamentals. These are three different strategies that you can take advantage of. You can take advantage of technical patterns, technical breakouts. You can take advantage of catalyst-driven stocks and fundamental. Okay. So the first things we'll go over here. I'm trying not to make this video too long because I could go on for hours about this really. So I'm just trying to do it kind of really down and dirty. First one, technical patterns. Just your basic patterns. Flag breaks, range breaks. I'll show you guys here. Flag breaks, stock goes up, pulls back, breaks this little downtrend, and then we continue higher. Or, my favorite, comes up, puts in a nice flat top right up here, puts in higher lows here, breaks out, and then you take it long for that next leg higher. Or bear flag comes down, puts in a bear flag right here, breaks this little uptrend, curls over, continues lower. Or flat bottom breakdown, flat bottom, bam. Okay, so just your basic. Good example here is GLD, nice bull flag forming. We can see this thing break next couple of days, continue higher. So good example there. Another one that you guys could look for is range breaks. Stock comes up to resistance level, puts itself in a range. It doesn't really matter. Just kind of range bound until eventually it breaks out. You guys can swing it long, or if it comes down, breaks the range to the downside, you can swing it short. So just basic technical patterns. I don't think technical breakouts are anything that it's nothing too complicated. If you spend any sort of time reading charts, looking at charts, you'll be able to figure out patterns and kind of take advantage of them. Okay. So the next one I want to go over here is moving averages. There's plenty of different strategies out there as well with moving average that you guys can take advantage of. My favorite right here is the 5-10 crossover. So whenever you get a golden crossover is going to be when the 5 moving averages, or the 5 moving average crosses above the 10 moving average. Or a death cross is going to be when the 5 crosses below the 10 moving average. And what you do is once you get that crossover, you swing it whichever direction that it's crossing over. So if you're getting a golden crossover and the 5 is crossing above the 10, then you swing it long until the 5 crosses back below the 10. So good example right here. The 5 crosses above the 10 right there. Take it, swing it long till it crosses back over right there. Bam. And what you're doing with this strategy is you're taking advantage of the short-term trend. It's going to be short-term, and the reason I like this strategy is because it's fairly short but very effective strategy. You're going to be holding it maybe a week, maybe 2 weeks, and you're taking advantage of the very strong trend. And if it's not a very strong trend, then you get out. So good example right here. It crosses over right here. You take it, okay, it goes up, and then it just chops around, crosses back over. Okay, cool. You're done with it. It's not a very strong trend. It's choppy. So you don't want to sit there, especially if you're playing options. You don't want to be sitting there in that chop, right? You want to take advantage of the nice, strong, bullish trend, and that's going to give you a nice trade. So a good example as well is, crossing over the downside, and you take it off when it crosses back over. Okay, so very easy, a basic strategy, nothing too difficult. And the reason I like this one too is you can play it on any different stock. Whatever your favorite stock is. If you like trading Amazon, you can do it on Amazon. If you like trading Nvidia, you can do it on Nvidia. When it crosses over to the upside, swing it. When it crosses over to the downside, take off your long position, take a short position. Then when it crosses back over, take off a short position, put on a long position. You can always have a swing trade on using this strategy. Okay? So an indicator real quick that I want to go over, which is one of my favorite indicators, is going to be the TTM squeeze, which is this one right here. On TrendSpider, it is called the BB/KC squeeze, which is the Bollinger Band Keltner Channel squeeze. On, like Thinkorswim, it's going to be called TTM squeeze. Anyways, what it is, sorry about that. What it is when the Bollinger Bands contract so tight that they're actually trading within the Keltner channels. And what that signals is that we are in a very low volatility environment. If you guys don't know, Bollinger Bands, they expand with volatility and then they contract with a lack of volatility. Okay, so that's why it's called the squeeze. The stock is getting squeezed in a low volatility environment. And that's what these little red dots mean right here. When these red dots appear, that means the Bollinger Bands are so contracted, there's so little volatility that they're trading within the Keltner channels. And we can get some very explosive moves coming out of a low volatility environment into a high volatility environment with all the energy that we are building up inside that low volatility environment. Now, for me, I like trading I like trading options when I swing trade. I like it because I can define my risk. Now, the reason I like using the TTM squeeze and this volatility indicator is because you're going to be catching options at their lowest point if you're taking the trade inside of a squeeze, because options naturally, they gain value in high volatility environments, and they are kind of at their lowest point when they're in a low volatility environment. So if you can catch a trade inside of a low volatility environment, grab some options, grab some calls, puts, whichever way it's breaking, then you're not only going to, one, have it going in your favor, have the option gaining value as the stock goes in your favor, it's also going to gain value in just it getting volatility. So you've got a couple different things going in your favor. Okay, so that's one of my favorite strategies. And basically all you're looking for here is a very good example. You can use your technical analysis, right? So we've got a range right here, like I was just showing you guys. We're sitting in a range. We're squeezing right here. And once we start getting this little histogram going over into green, and we're still squeezing, but we're breaking this range to the upside, that's going to be your entry point. Then this confirms once it starts going green. These are in the blue up here. That's confirmation. That's telling you that the trend is now in your favor. We're going into a high volatility environment, and we're going into a trend in your favor in that high volatility environment. And look at this nice big explosive move that we got. Now what you want to do is start taking pieces off along the way. And as this starts slowing down right here, and we start getting on this little backside trend right here, that's when you want to be scaling out, taking the majority of your position off. Okay. So that's a quick little strategy there. One of my favorite. So try not to make this video too long here, but another one. So we'll start going over the catalyst driven stocks here, or catalyst driven swings here. So, known upcoming catalysts tend to get bought into or sold off, whichever direction people think that it's going to go. So two very good examples: earnings and FDA news. Earnings, when everybody thinks that a stock is going to beat, like Amazon for an example, if everybody thinks that Amazon is going to beat on their earnings, then it'll start getting bought into leading into earnings because everybody wants to be in before they report their earnings. So you can take advantage of this. You can buy a couple weeks before Amazon has earnings, and you can write it up as Amazon starts getting bought up leading into earnings. And a very good website that you guys can check out here to find this is going to be Earnings Whisperer here. Earningswhisperer.com. They've got all the earnings. You can check out when Amazon reporting the next earnings. Buy it a month out, hold it as it starts getting bought up leading into earnings, and then you can either take it off before earnings. You can take out half, 3/4 before earnings, let the last piece ride. Or because you're in such a position prior to earnings, you can try to ride it out and see if you can get that nice big gap up. Okay? Or vice versa, if you think the stock is going to miss, you could short it or buy some puts leading into earnings, ride it out for a month as it gets sold off, and then you can either take it off, hold the piece, or hold the whole thing through earnings, which Of course, that's going to be riskier if you're going to hold it through earnings. Very good strategy, though. I play it all the time. It's it's a good one. The other one is FDA. FDA news. You guys can go here to Biofarm Catalyst here, and you can check out all of the stocks that have upcoming FDA news. Phase 2, phase 3, phase half, phase 1. You can look at when these stocks are going to be reporting this data, and it gives you the date, gives you the phase, it gives you the drug, it gives you the ticker, the stock price, it gives you everything. And a lot of the times what I've noticed and how I like to play it is when there's a big drug coming up and cancer related, for an example, or COVID-19 vaccine. You can see J&J right here, phase half in September. It tends to get bought up leading in earnings because everybody wants to be in it before they report. So you can buy it a month out, a couple weeks out before they report the data, and you can write it up before they report it as it starts getting bought into. Then you can, same thing with earnings, you can hold it through earnings, or you can take off a piece, you can take off half, you can take off 3/4, let the last piece ride, or you can hold the whole thing through it because you're already in a well-positioned average before prior to this news. But there's a couple things that I like to look for as I do this. I like to look for, one, they have to have a specific date. Okay, September 29th, that's good. They tell you exactly when they're going to report this data. Now, if we get second half of September, we don't know when that's going to be. We have no clue. It could be Monday, it could be Tuesday, it could be Wednesday, it could be Thursday. Who knows? We don't know. We don't know. I like to have a specific date. The other thing, phase 3. The other thing, the drug. Basically, at this point, cancer and COVID vaccine, those are going to be the two drugs that are going to get bought up leading into these type of news events, okay? And then, because I like swinging little higher price stocks, not much of a penny stock trader, so I like to look at, which stock. So Johnson & Johnson, we know, GSK, good. PFE, good. BGNE, perfect. So I like to go through here, IMGN, okay, I'm not going to pay attention to it, but so that's what I like to look for. Then I just look for stocks that are reporting, a couple weeks, month out. So for an example, Johnson & Johnson, not a good example because they don't have a specific date, but GSK, if it was cancer related, that's good too. September 26th, we have a date, we have the drug, and looking for that to get bought up leading into this event. Okay. Now, the last one I'm going to do is the FIRE formula. If you guys have watched any of my previous videos, I like to use the FIRE formula for day trading because it gives me a little bit of a understanding of how good or how bad the earnings were and if it's going to continue to get sold off, depending on what the value of the stock is. Now, I want to go over a good example with you guys here. And, I want to go over Play. Play had a good example. It's got a good example of getting sold off from last earnings, and it's got a good example of a nice upcoming swing. Okay, so I want to show you guys Play here. I want to show you guys the earnings that they just reported. I want to go over this with you guys, but first thing I do is go back to the last earnings, which is going to be June 11th. They reported a loss of 137 versus a loss of 85. Okay, so we go back here. This is June 11th, so June 10th. We take the closing price, 1667. Wait. Yeah, 1667. 1667. So they reported a loss of 137 versus 85. Negative numbers, we got to flip it around, so we're going to go 185 versus 1.37. Now we're going to check out the revs here. And we're going to go 159.8 versus 167.8. So we're going to go 159.8 versus 167.8. Bam. It's going to give us 1310 is going to be the value of the stock after their their last earnings, not the ones that they just reported. So what was it again? 1310. 1310 Bam. Okay, so you guys can see right here, they reported earnings here. Now, they, look how they, first off, they got sold right down to the value level. And then it got bought up, it got bounced off that, and that's a swing entry right there. You can short it, buy some puts, and swing it as it fades off back down towards the value level. So you basically shorted it up here at 17, 18 bucks and just faded it off back down to 13 where it just grinded out from there at the value level. Okay. Now what I want to do here is I want to punch in. I want to punch in. So 1310 is the new value. Okay. So now what we're going to do is we're going to go back to the earnings that we just reported, which was 124, a loss of 124 versus 139. Okay, so negative numbers, we're going to flip it, 139 versus 124. Let's check out the revs here. Revs was 50.8 versus 80.9. So we're going to go 50.8 versus 80.9. Bam, it's going to give us a value of 1145, okay? So now we know the value of the stock is 1145, which is right about there somewhere. So we have a potential swing coming up as we get sold off back down into the 1130 level, okay? So, or 1140 level, okay? So that's how you can use the FIRE formula for swing trading as well, okay? So that's pretty much it. That's kind of a down and dirty. You know, there's a lot more, you know, technical swings and stuff like that that I could get into, but you know, I think that's pretty much good. Anyways, guys, thanks for watching. Hope you guys have a great weekend, and yeah, take care.